because why not? All right, Elon, what do you got for us today, buddy? Okay, that's pretty
Let's see, what
interesting.
is he pumping today? Drum roll, please, everybody. I
In
don't know
honor to
what
work
that's
with such a
supposed to
great
be.
team. Yeah, minus the lifts, Starship. It's got some other stuff. Wins are too high today. So I heard they're doing advertising, by the way. Did you hear about that? Chill deal screen. Yeah, I think he's okay. Jake, he puts up a pixelated Minecraft fucking face. That's hilarious. Anyway,
That's a good one. Well done, Jake. Well done.
well played. Well,
It's
bien
actually
hecho.
not for the first time in a million years. It's not blurry yet, so
Bien hecho, bien hecho.
we're
So we
winning.
have. So, but I did hear. I saw an article about Maybe it's not Starlink, but it has to do with
Starlight.
SpaceX and putting ads up in space. Did you see that one?
Oh,
That
oh.
sounds like an Onions article, but it's not. It's a true fact,
That's funny.
ladies and gentlemen. Yeah, they want to put up some ads up in space. But yeah, Elon's got some decent stuff up here, I guess. Starship boosters, Warp 9 activated. All right, let's talk crypto because that's ultimately what we want to find out right now. Got CoinDesk up on my slide. I know you just pulled up Bezos, but this kind of came up last minute in terms of talking about crypto, what we're going to be looking at today. So decide why
Do
not.
it.
What do you got? You got Bitcoin up? All right, we're at 44.
Yep.
Let's see, I'm going to go back to the dashboard and see what else we
That's the
got.
space ad on the article. It's pretty funny.
Yeah, it's not. I'll see if I can find it. But essentially, they are looking at putting ads up in space. They're going to put a live camera up on SpaceX's his next flight, whatever it is that he's going to be doing. Elon Musk, Tesla, etc. They're going to be pushing up a satellite, and they're going to put a live stream apparently on the next rocket that goes up with specifically camera pointed at whatever, how much ever bajillion dollars somebody's going to pay to have their name branded on the live stream cast of the rocket going up. Anyway, I digress. What's Bitcoin looking like? Cause
I mean, it's looking good. I mean, it's I made I think we were talking about it in the Discord. I think everyone here is part of the Discord at this point, but I did a video on Bitcoin as well when it was at 29. So you can kind of see on this chart. This is kind of like a doesn't, but you can see there's kind of like this little downwards. This is not a great chart to use for this example, but we saw
I
this
know what you mean.
descending triangle, and it's basically like where you have a line bought here, and it's like a downward trajectory that the stock is going. And we just had like a technical breakout, and this technical breakout has forced a really wild push to the upside. See, my screen's blurry. There it is. Back to Minecraft. Can't win, bro. Can't win with this screen shit.
A little funky. Yeah, I don't know what the deal is. Got Fall Guys
But it
going
was a
on.
technical breakout, and it was a short squeeze first off, and now it's Minecraft exactly. It was a technical squeeze first off, and now it's now it's getting some traction and some legs. So we'll see how high it goes. I think crypto's really it's in an interesting place because there's a lot of Nate, did you read about the infrastructure bill and all the crypto tax that they're talking about?
I did not. Pray
Oh
tell.
yeah, let me.
I want to know about this. I do know that Ethereum is looking at a different. Also, Dill's falling off the stream. Yes, he is. I don't know why.
This is a forehead stream, everybody.
He's you get a piece of his forehead. Thank you for bringing that to my attention.
On my blurry screen, I'm just. Can you keep? Oh man, it's just so bad. It's such a bad experience for everybody seeing my blurry screen.
Yeah, I'm sorry, peeps. There, we'll go like that for a second.
It's just so terrible. We can't even read the words. What up, King Boone?
Shoot me
Nate, do
the
you want to
link.
just bring up?
Yeah,
Can you
shoot me
just?
the link.
Yeah.
Shoot me the link, and we'll pop it up full full spread. So that would be Microsoft.
Anyway, there's a couple tax bills in the infrastructure bill. So they're trying to find ways. Okay, we want to spend all this money over the next 7 years, but they have to figure out where they're getting that money from. And so obviously they see all this money pouring into crypto, and so all eyes are on crypto as a place to make money off of, like. And so there's a couple things
God,
currently being.
what's going on my stream?
Huh?
It's pinging out. I don't know what's going on here. That's weird. Anyway,
Beep
keep
boop
going.
bop boop.
Yeah, for real.
Um,
Jesus.
but yeah, so they're just trying to propose a really large tax, and basically, let's see, it's here. The provision require. We already know this one, that any transaction over 10K, you have to report to the IRS. We already know about that one. They've been talking about that for a while.
Yeah, that's annoying.
Which is a big deal because people are making really big. You're a crypto, yeah, we know you're a crypto bear, baboon.
You still bear on that? Even though it's up like a bajillion percent this week, like in the last 48 hours.
I mean, it's still not at its high.
That's true.
Still like.
That's so weird that your screen is like that. So as you guys can see, the hieroglyphics here.
So the high enforcement may bring an estimated 28 billion over the next decade in taxation. So 28 billion is what they're trying to get from crypto taxes over the next decade. So they're just trying to set up more structured taxes on crypto. And so that's, I personally think,
Yeah.
well, I think for me, it's two things. One, it's a positive because it makes it safer for people to invest. People are like, oh, the government's creating some rules around it, so people feel safer to invest. On the flip side is we don't know what kind of taxation they're expecting to put on these moving forward. Like, are they going to tax it even more than regular, capital gains tax? Like, there's a lot of who knows. So it's going to be interesting to see how this plays out and how this might be a really big part of the infrastructure bill. So I'm curious what you guys think.
$1 trillion. So I know that's been something that they've been trying to figure out, Congress in particular, bipartisan, if you will, that says, how are we going to fund this deficit? And I don't know if anybody has seen it, but there's a massive deficit in the next 10 years to fund everything that Biden administration wants to do. And this is just talking, I don't want to get political, but this is definitely something that needs to be of concern a little bit. I wouldn't say fully, but when we're thinking about this, what's the debt that we're willing to incur versus the opportunities for us at investments, if you will, that we being the country, are willing to put forth. So I'd be very curious, to your point, what are people thinking about that? Because $1 trillion infrastructure bill somebody has to pay for it. Is it the crypto investors? Is it investors in general? Is it taxpayers? Is it the normal person like me, you, Dill, whatever, right? Like, what does that look like? So,
yeah, I'm curious what you guys think as well. Do you think that more regulation and taxation is going to have a really negative impact on crypto or a positive impact? I'm curious what you guys think. If write in the chat, I'm curious what you guys think.
And this is interesting because the amendment does explicitly, there's an amendment to this bill that does say it explicitly excludes miners and validators. So the people who are actually mining, what do you think about that? Cuz do you think that's fair that the people they're actually making a boatload of money by mining and selling it, right? I mean, they're getting a cut. Are they not?
I mean, I think they're probably still getting taxed as a business though. Like, they're still having business taxes, right? They're just not getting taxed as a capital gains, which I get that. Like, mining is a business. So you have
Bye
to
bye
report your
Social
business,
Security.
right?
Yeah. I don't even know if we're gonna have Social Security by the time we hit our retirement age,
Who
Jake. To
knows?
be honest, man, we're paying it forward. I don't know if we're gonna get it back.
Yeah, who
I'll put that
knows?
and put it on the bookshelf for now because that's a yeah.
Negative in which sense? I think crypto needs this to move forward. Yeah, that's why I'm curious everyone's perspective, if it's a positive or a negative.
Yeah, this is very
Regulation
interesting.
and taxation.
Yeah,
Will
because if you
that make the price
tax
go higher or lower?
exactly theoretically, if you start taxing people, it's going to push them to other investment opportunities, right?
But if you regulate it, then it makes it feel safer for people, right? So it's like, I guess we'll find out. Like, are people really using crypto as a way to skip taxes? I think that's what we'll learn. Because if it was, then maybe they'll have some negative downside.
Exactly. In the meantime, I was hoping I could pull up a chart that I had about this. Apparently, I didn't save it in the correct spot. But speaking of debt, I don't know if you all
Yeah,
saw the
maybe.
consumer debt. Could lead to lower prices. Yeah, been saying this for years. I feel you, Jake. I feel you. So, but speaking of debt, this is also pretty interesting, right? Household debt jumps by the most in 14 years and nearly 15 trillion in the second quarter that we're talking about here. So this was also something that really piqued my interest because credit card balances increased 17 billion, while auto loans, we've talked about this, used vehicles, etc., were up 33 billion. However, student loan debts actually decreased in the same period, falling 14 billion. So when we're looking at this beautiful
Blurry
chart here, as
screen
always.
again.
What's that? You popped up.
Blurry screen again. But you guys get the point from the Minecraft screen. You guys get the point. This is a consumer debt chart. So in total debt increasing.
What's the
We're
pink?
now
What's the
above.
pink? What's the pink area
Where
and the blue
the
area?
pink is non-housing debt, and the blue is with housing debt, I think. So what's really interesting is in 2018 or 2017 and 18, we passed the 2008 bubble, housing bubble, which is interesting.
Mm-hmm. But we're seeing this go up, which is also very interesting. I think you had a chart, and I'll see if I can pull it up. But in particular with debt, leveraged debt in S&P 500, we'll talk about that here in a little bit. But just in debt in general, as debt is increasing, this is kind of scary because we saw the same thing happen around 2008, 2010 when the other crash happened, right? So must be skewed by the difference. The student loan thing must be skewed by the difference. I don't know if it's by the difference. I think I know what you're saying is relatively speaking, I think is what you're saying, right? Relative to all the other loan or the other debt coming out. I would say because of auto loans, people wanting to buy cars, because of housing, interest rates being so low, people are buying homes, credit cards because people got the Biden money, if you will, the federal money that came through. People are starting to purchase. Ironically, though, credit card debt went down. People were paying off their debts, and credit card companies were trying to figure out ways to recoup the fees that they were collecting from folks. So this is where I'm a little lost, honestly, and I'll have to
That
look into
Biden
this a little
money,
more.
bro.
Yeah, well, people
It's
are
that stimmy money.
right, but that's also going to be halted here pretty soon as well. But student debt loan, I do want to look into that as well a little bit more because apparently, supposedly, I think this is accurate, the price of tuition is increasing as well. So as tuition is increasing, are people taking out more loans, or are people not even doing, or maybe they're not going to universities, maybe they're doing community colleges and it's saving them some money. Maybe they aren't even going to school.
Yeah.
Like, what is the alternatives that people are doing? Is it online schooling? Is it some of these other opportunities that defray or lower the costs for people to actually go to schools in person? Because we all know online school or MOOCs are a little cheaper, or a lot cheaper than actually attending a school. So all this to say, you have another chart, a pixelated chart that you just popped up. But
But yeah,
I'd be
this
curious.
chart shows the correlation between margin debt and the S&P 500. So basically, what the chart showing, because you can't read it, the blue line is the S&P 500 and the red line is the marginal debt. So basically, what this chart is showing as marginal debt increases, the S&P 500 increases as well. And it makes sense because the more money people are spending, the more in debt we are, the better revenue companies have, you know? So it's just kind of the correlation between debt and the stock market, right? Because the point of this stream is for us to figure out what's going on in the market at the end of the day. And so as long as debt is increasing, then the S&P 500 should go higher. What do you guys think? Do you think that debt and S&P 500 are correlated? How about you, Nate? What do you think? And do you think that we are at the peak of marginal debt, or do you think with like
I think it
the
could
with
still
the Biden
continue,
money
man.
ending
I
and
think
things
it
like
could
that, or
continue. Yeah. Et never mind. LOL. How the administration deferred student loan. Yeah. No, you're good, Babu. So
yep,
the
till January
deferred
31st.
Yeah, deferred debt. Yeah, I think that has a play on it. There's a lot of moratoriums, if you will, on this stuff as well. So rent payments, for example, both in commercial real estate as well as residential real estate, is having an effect on this. The problem is we don't know what that effect is right now. And then it just got
Mhm.
extended because of the CDC saying that you need to let people not go homeless or without a house because that could also increase the epidemic or pandemic that much more. So we're looking at.
Getting my charts.
Hey, there we go. That looks
There we go.
beautiful.
So
So
now that it's
FINRA,
clear,
yeah.
before it goes blurry again, let me describe what it's showing here. So in this chart, whenever marginal debt started decreasing, we also saw a crash in the S&P 500. So back in the bubble in 2000, the housing market in 2008, we saw the market pull back a little bit. COVID, we saw debt come back, debt decreasing for about 2 years, marginal debt. And so we'll have to see. Right now, marginal debt is skyrocketing. Like, it doesn't look like it's turning over yet. So it'd be really curious.
Do
I
we know
think
who's
I'm
taking out that
personally
debt?
keeping on. Huh?
Do we know who's taking out that debt? Did it say
It
in the
says
report at all?
marginal debt. Let me see.
But who? I'd be curious to see who. Like, anyway, I digress.
Yeah, I'm not sure. I think it's just interesting the correlation S&P to the moon.
Oh, 100%, dude. Like, so, I mean, you look back at the really trend, if you will, and it's pretty interesting. So the compound, I'm a fanatic listener to. They had a special guest on that was talking about market sentiment and how there's kind of this mental memory, if you will, of the market and the stock market and how people remember what happened back in the day and how the market responds because of that. I don't know if that's true 100% because it would be, the assumption is people felt whatever they felt in the past predicts how they're going to react in the future. But I think there's just trends. When's that last? It got a little pixelated again. When's that last? That dip in the middle. What year is that?
Housing market,
Yeah, housing. Yeah, exactly.
housing
So housing
crash.
market. Yeah, crash. Do you think? I mean, are we on
Well, that was
pace for?
default. That was defaulting on debt, right? That's why that happened.
Exactly. Do we think that's going to happen again though? Because somebody's got to hold the bag, right? That's what we keep saying. We being the collective economy. Who's going to hold the bag? Do you think we're going to see that trend happen again? Based on
Um,
because we have a very similar, very
yeah.
eerily similar path. If you look at the last, I don't know, what's that year? I guess roughly, and that of the year leading up to the crash, there's a very similar look paradigm, if you will, happening here, transpiring, and maybe it won't crash as much because it's all relative once again, to where things stand. I don't know. I'd be curious to see, but
I mean, I wonder if
that
there's
is being absorbed
correlation
through
between
bonds.
savings rate.
So, what do you think about the debt being absorbed through bonds? Babu brings up a good point. He says there's shady reports.
Uh,
Uh, I
I
don't
don't
know.
know.
Yeah,
It's hard to know everything that's going on behind the scenes. I think there's a lot happening right now, and
yeah,
it's hard to know everything that's going on. But I mean, the thing that we do know is that the Fed is printing as much more money than we ever have. They're buying more mortgage-backed security and bonds than they ever have. So those definitely play a part in, in debt reaching these crazy all-time highs and exploding. When we think of the economy, we've talked about this in last streams too, past streams. Interest rates are the lowest they've ever been in history, and they don't look like they're going to be increasing anytime soon. And so, with the Fed printing money and propping up the markets in some capacity, and interest rates being at zero, people are like, oh, like I'm gonna take on debt because it's cheap right now. That's both from the consumer perspective and the business perspective. And so, I don't. I mean, who knows what's happening behind the scenes, but all the all the data is saying that the stocks that the S&P 500 should go higher because debt continues to go up and there's a correlation there, and interest rates are as low as they have been, which continues to propel more debt. And so there's no red flags yet. Everything being all the data that we're seeing today is showing that the market should go higher. I'm curious what you guys think, and then Nate, what do you think?
yeah. I just pulled up a chart, and this came out. There's a
You want
LinkedIn
to flip
post.
screens? Can we flip
Um,
screens?
that's good. We'll keep it
Do we?
like this. It's
Okay.
good. It's good. I'll just kind of scroll to the side, but yeah, very valid point. So S&P 500. Somebody's saying that it's going to hit 5,000 by the end of the year, and possibly even more in the following years. So here's a chart of that. You see some of the resistance being hit, and typically what people are talking about is once you see it kind of hitting resistance, it dropped to support. It'll bounce back up, and so theoretically, so folks are saying, look at this going all the way up, possibly could hit 5,000 by the end of the year. Some saying it could go even further at this point in time. But in 2009, I mean, it was about, they're saying about 1,000. I mean, it dipped, it came back up. But historically speaking, if you're looking at it theoretically, based on exactly what we were talking about, people taking out more debt, does that force the S&P to go up because of that? And then we'll see dips or corrections, some consolidation throughout the years. But theoretically with inflation, I mean, if we're aimed at 2%, 2.5%, yeah, hypothetically it would grow, and accordingly, therefore, it would go to 5,000 at some point. But I don't know if this is being bullish or if people are just speculating at this point. But we also know the S&P 500 is heavily weighted towards certain stocks that weren't really existing 5 years ago, right? To this point. And so, we have the NASDAQ, S&P 500, which are heavily weighted by the tech stocks, or the FANG group, which are well beyond what they were prior to, which are pushing them up. So, I don't know. I don't know what to think of this. I'm very skeptical about the market. The market's driven by skepticism and speculation anyway. I mean, it's really what people think anything is worth, right? I'm putting air quotes up here. Like,
Yeah.
it's what people are willing to pay for it. And so at any point in time, people might say Apple's not worth whatever it is, right? And, therefore Apple might split their stock, or they might respond accordingly to make it more valuable, quote unquote, to the buyer, to the market. So, but I thought this was very fascinating that people are going to think that it's going to break 5,000, and it might, quite frankly, based on everything that we're looking at. And if the Fed keeps pushing money forward, and quantitative easing persists, and we keep printing money, it could happen. Like I don't know, man. I don't know.
Yeah, I think it's really interesting because last week we talked about a little bit is that we're seeing a lot of red flags in the market of things happening. Like, um, I'm blanking. Sorry, I'm like doing two things at once.
You're good.
But it's like we're seeing debt all-time high, right? So we're seeing that as a positive correlation to the market, and we're seeing growth as high it's ever been. I think, last month we saw that growth was at 6.5% when the US average is like 3%, 2%. But at the same time, we're seeing growth start to slow in a time where growth should be as high as possible. Last month, GDP growth was supposed to be 8.5%, but it was 6.5%. So is that foretelling something that all this growth is gonna, or all the debt that's being accumulated is gonna start slowing because growth is slowing? Growth and debt is correlated because the more debt you have, the more growth you have. The more growth you have, the stock market goes higher. So I think the market's in a really strange place because we're seeing signs that are saying things are looking terrible, but we're having signs that say things are looking better than they ever have, which is the reason stocks are valued as high as they've ever been. So I don't know. I'm pretty confused about the market. Personally, I don't know if we're like in the middle of a new bull market or if we're at the tail end of a bull market. Yeah, I don't know which one it is. But these are all the things that Nate and I are keeping an eye on to figure out. Okay, can the S&P get to 500, 5,000 eventually? Is that going to happen?
Mm-hmm.
But I don't know. It's really hard to know at this point. There's both amazing signs and a lot of red flags as well.
Yeah. But yeah, bonds, I don't know about that 100% at this point. Then the other thing is we have global externalities that definitely play into what we're doing. So China, a couple of the other countries that we're trying to figure out in terms of partnerships, but also import-export. We talked about that a couple weeks ago, or last week in particular, about some of that and the constraints that puts on supply as well. But as we're moving forward, I don't know, was there anything else you want to talk on this topic? We'll get into some stock stuff here in a little bit, individual stocks, but workforce is pretty interesting.
Yeah, we can jump into the workforce stuff.
So we have more workers. I don't know who's looking for new work here tonight, but there's definitely a bunch of other people looking for work. In fact, 60% are rethinking their career. 1 in 3 workers are now considering leaving their job, and what kind of impact that has. And we've talked about this time and time again. Delta, the Lambda Greek viruses, or have they already been priced in? I'll talk about that in a second. I don't know if you have anything on that. But Great Recession, 1 in 3 workers are now considering leaving their job, as I mentioned before. There's also a lot of jobs that are incentivizing and increasing pay. Also, minimum wage is going up in certain areas, or specifically certain companies. They're looking at paying more to retain or recruit some workers. But it's very interesting to see that how workers are kind of demanding, as we've talked about before. But 60%, I mean, anybody else thinking about leaving their current job?
Yeah, I'm curious what you guys think in the chat.
350 CEOs
gonna
and
leave in
human
your job?
resources. 74% plan to have their employees back in the office by fall. But I think it's JP Morgan, and I forget the other firm, actually still have their people working in the office. Jake says no. Thank you for that response. JP Morgan, I forget the other bank. They're actually still having their employees work at the office still. But I know a lot of people, specifically where I'm from, the Bay Area, you have Google, you have Facebook, Twitter. All these folks are saying don't come back at least until September, October, maybe even November, assuming everything works out okay. So to your question, Babu, I think this is going to definitely have an effect on the tech stocks in particular. I mean, those are going to keep growing as people don't return to the office. Quite frankly, I think tech is leading how people are responding to returning to the office, and folks like us are leveraging that to negotiate our terms with our current employers of saying, look at all these other people who aren't returning. Why can't I don't need to return. I'm going to look for something else. So thanks, Jake. I appreciate your flexibility in being able to do that. But yeah, King, you and I'd say at least half of the world likes working from home. And I would say as a parent, as somebody who also works in economic business development, it is very convenient for me to work from home. but it's also important for me to be on the field, if you will. But easy money. Yep. And really leading, the work that we're doing out in the economy. It's important for us to be out there and showing face. So, but it's also a choice of life, if you will, lifestyle choices, but also ramifications for what you decide. So, yeah, Randy, I can see that.
I mean, here's like a connection. So do we think that people working from home, are people saving more money working from home? Like you're not eating out for lunch as much. You're not driving as much, or not as much gas money being spent. So I'm curious, like if people from working from home is actually going to have a positive impact on consumer spending and debt, because people are saving more money, which if we know anything about that chart we showed earlier is people like to spend money, and so I'm curious, what do you guys think? Do you think that people for working from home is only going to accelerate the economy more because people, maybe technically will be saving more money? I'm curious what you guys think. But that's just an interesting thought, I just had about working from home and people saving more money potentially. But I think it's going to be interesting to see what impacts that have on the economy. So like if I'm thinking about stocks to invest in, if people are going to work from home, we're going to see a 30-40% reduction, kind of like Randy's partner, staying home and working, then if 30% of the population is not going to go to the office anymore, then I don't want to invest in certain things. Like, I probably wouldn't want to invest in some type of real estate REITs that do, work building, or like corporate offices and things like that. So I'm trying to think how this might impact my trading strategy. Ubers, like Uber and Lyft and those type of things, they might do better because people are going to be ordering lunch to their homes and things like that, maybe. And then you think about like insurance companies, like I probably wouldn't want to hold insurance companies because if people are working from home more, they might downsize, they might not drive as much, they might go to one car for their family. And it's really interesting how it might change the world and kind of our economy and stock market. My brother-in-law works for REI. They're letting him work from home and they don't even have a building anymore. Yeah, that's crazy. You have to take into account how smart people are about managing their money. Yeah. And I think, if you even think about it, even though Google and Apple and Microsoft and all them are saying that they're going to have people who want to work in the office can come back after they make sure they're vaccinated. But if you think about them downsizing their buildings, that's less money they're spending on rent, which is going to help their bottom line, So that makes, in my mind, that makes Google and Microsoft and Facebook even more attractive at these price levels because their expenses are going down because people are working from home more, and that's less cost on their buildings because those companies spend hundreds of thousands of millions of dollars on their office spaces. So that could have a positive impact on their stocks if more people work from home.
Yeah, it's interesting. I was listening while I walked out, and you brought up a pretty good point. And so I would say my electric bill has gone up. Part of my food consumption has gone up. Both good and bad. Just because I'm constantly eating stuff while I'm at home.
That's true.
But I'm also, like you were mentioning, DoorDash or Uber, they charge quite a bit. And I would say in the Bay Area and other areas of the States, there's a bunch of lawsuits flying around right now trying to figure out how do you balance supply and demand, in particular the fees that are associated with DoorDash and the individual restaurants. So this is where capitalism, quite frankly, is kind of clashing with capitalism in and of itself. Is who's now intervening, and it's the government. And I'm a capitalist by nature. I like the free market, the laissez-faire model, quite frankly. But at the same point in time, I do think that when you're gouging or trying to win over industries, specifically when there's like a pandemic or an emergency situation that people need to start not taking advantage of, but have an understanding of, working together as opposed to, taking advantage of the situation. So anyway, I digress. But essentially what I'm saying is there's a lot of problems that are happening just around that model in and of itself. And predominantly it's how much percentage, and yes, I agree with you, King. That's something that's coming around full circle, is how do you take this model of delivery services, which they also have to make money, right? And take care of their employees, to your point, King, of, the tips. DoorDash was taking part of the tips or the full tips from their delivery drivers at one point, and then it got called out, and now they're like, oh, we're giving that fully back to our drivers. But there's so many litigations happening right now that it's increasing the cost for some of these opportunities to happen. So, and I would tell you, for something that's $10, typically when you go to buy something, specifically here in the Bay Area, so you want to buy a burrito, yes, they are $10. You want to buy it, it's $12 on DoorDash, plus all the fees that come with it. So DoorDash already increases the price, the menu item in and of itself, plus whatever. So my expenses, I did go on a DoorDash raise, if you will, and bought, at least once, maybe twice or three times a week on DoorDash, and realized, holy crap, I'm spending way too much money on DoorDash. And so I'm going down the street where, stuff's pretty expensive at Safeway. As some of you might know, that's the closest grocer to my neighborhood. That's accessible for me to walk and whatnot. But I'm paying a lot, and our utility bill is increasing. However, I'm saving on gas, right? Maybe I don't want to keep my vehicle in the future. I don't know at this point, but I'm a little in limbo. I don't know. Where are you at with that?
With what aspect of what you said?
Working from home and costs of associating that with.
Yeah, I don't know. I'm pretty like a frugal fella, so I'm always saving a dollar here or there. So
Right.
I definitely, like you, I think I'm spending for sure more on like electricity and water.
My AC, bro.
Yeah, for sure my AC over here in Texas. I'm for sure blasting that all day long. So those kind of areas have gone up, but like, my wife and I, we now work both from home. We were spending like, when we were both driving, we were spending like $200-300 a month on gas, and we don't spend that on gas anymore. And so that's $300. Are we spending $300 more on our electricity bill? I don't think so. Mm-hmm. And I think, we're eating more food, but if I was at work in the office, I might go out for lunch with people or things like that, where at home I'm making lunch at my house for the most part. Mm-hmm. So I think I'm saving more, a little bit more, but I kind of agree with Randy. I'm probably about equal. It's probably equaling out to about average, because I think I do probably eat out a little bit more, and those kind of smaller costs that can add up over time, like you were saying, Nate, a bunch of DoorDashes and things like that. I'm just
Randy,
curious how it's going to impact the economy and the stock market and what to invest in if people keep working from home.
Yeah. So Randy beat me to something I was going to bring up, and there's been a lot of data on this more recently than ever, and I've thought about this for many years, is what's the cost of commuting to your workplace? Are you losing a half hour, 2 hours, depending where you're at, of productivity? They call it labor productivity in the market. And so there's been a lot of studies about this, and the fact that people are working from home, even though your supervisor, your boss can't see you, people are working more than they have before, and the company's making more from their employees than they have before. So it's a very interesting dynamic here, and quite frankly, a paradox as to what people are thinking of my employees. And I have full faith in my team, right? My team's phenomenal. And so the fact that I can communicate with them through the internet, right? We use Google Hangouts and email and all the other crazy stuff that we use these days, text messaging, obviously. But through that, we save time by not having to commute. you know, JP Morgan, Jamie Dimon of JP Morgan was like, look, I don't have to fly to 4 different cities in four, you know, I talked about this before, 4 different cities in 4 different days. I can do it in literally 4 hours. I can have the same meetings on Zoom or whatever and accomplish the same
Yeah.
exact thing. Granted, the human element of being with a person in person,
True.
there's an intangible element to that. However, I think by virtue of being able to save time and money, it pays off. It pays dividends, if you will. So I would say it's a mix. I think a hybrid model is very much warranted and is
Yeah.
would be very fruitful and conducive to the business environment. I'm a proponent of that. I would actually say that would be something even in my wheelhouse. And saying, you know, 2-3 days at the office, and then the other two, put your head down and work from your office at home or whatever, and just spend time with you and yourself to do whatever you have to do. And I know every job's not like that, but specifically when you're thinking about certain industries, it definitely pays off. But Randy hit it on the head. That's where my mind always goes: is how much time are you saving, both fiscally but also mentally, of not sitting in traffic and or just commuting? Because more people live. I think the average person lives 30 minutes out from where their employer is. If I recall, that was from several
Yeah.
years ago. It might have changed at this point,
It's
but
really interesting too when you talk about like hybrid working or even working from home. Like, you know, my wife and I, we were talking about downsizing to one car. You know, like
mm,
we're paying multiple $100s for both our car insurances, and we've barely driven over the last 2 years. So it's
mm,
like all this money that we're continuing to spend. You know, you have a car bill, you have
mm-hmm,
your car insurance, like that could be hundreds of dollars a month you're spending on something that you're never using. And so it's like if both of us or one of us continue to work from home, we're like, why not just go to one car or one? And if I gotta go up to office one day a week or something, why
mm-hmm.
don't I just Uber to work once a week if I have to?
Exactly.
You know,
So I
that's
have a
those are things I started thinking about. It's
so
interesting.
I have a question for you. That brings up a very solid point. There was a stock you were looking at that was an insurance stock for
Root
driving.
that one.
Root. Yep, that's the one.
Yeah.
Do you think this is going to have a shift in that, or do you think Root is the paradigm, the new insurance company? Because explain what Root is. We've talked about it a while back,
Yeah.
but kind of an on-demand insurance company, maybe. What do you think that stock has a chance?
Yeah, I
And
definitely think that I definitely could see like this new economy that if we continue to shift this way with all the variations coming out, like people are only going to work from home longer and we're going to eventually shift to that model even more. But like Root Insurance, there's this other company called Meta something. I can't remember the name off the top of my head, but these kind of companies, Root Insurance is not exactly like this, but they typically they have a smaller people that they let onto their insurance platform, and they're all app-based company. Um, and you can get a much lower rates through them. And then there's this other company, man, I'm trying to remember the name. They're a public company as well, but what they do is your insurance actually pay by mile. So instead of paying the 100 and 150 bucks a month, regardless, this company is like, no, you're gonna pay for however many miles you drive. And so we could definitely see like this work from home economy totally shift an industry and maybe a potential, you know, long-term investment in some of these companies. I'm gonna try to find this company name because I might start looking at it.
is it Mile? Mile?
Oh yeah, it is Mile, Meta Mile. So Mile stock, they basically it's like kind of like a pay per mile. They're a startup pay per mile insurance company. So that's super interesting to me because this is something I've actually talked to because I was driving a little bit more than my wife was in her car, and I was like, let's put our cars on this, or let's put your car at least on this meta mile because we take my car 90% of the time. You're not driving to work anymore, so we just have a car sitting literally in the parking lot, and it's like let's just pay per mile on there because we're never using it. And so I don't know, it kind of makes a stock like this kind of interesting as a potential company to buy. You know, as they continue to go lower, you could see people shifting to these kind of providers for their car insurance. It's interesting.
Mm. What's their market cap right now?
850 million, pretty small.
Okay.
I think their revenue is pretty small too, if I remember correctly, though.
Interesting. Does anybody
But
use
it's
any of
interesting.
those? Anybody interested in those? I'm curious, just from a consumer standpoint, if anybody even has car insurance or has opted out, isn't driving. Why not? Um, what people think of those stocks in particular. I think those are pretty on demand. Insurance is kind of what it is. Yeah, I've heard of a few of these back in the day, and they really didn't make any sense. But I think
Yeah.
more now than ever, it really does, because I'm in the same boat. I'm paying quite a bit for insurance. I'm paying a car payment, and I'm like, what the hell am I paying for?
Yeah, it's like
Like, what am
hundreds
I
of
getting out
dollars
of
a
it?
month.
Yeah, it's like, but
You
yeah,
go on vacation. Feel you. We gotta come hang out with you, man.
for real.
Latin America.
Vamos para allá. Vamos a Peru. A Peru, Peru.
Peru.
Peru is actually where that other outbreak is happening from, huh? That other
Yeah.
variant. So
Now
King,
we
stay
now
away from
well
King. Stay away.
well King is funny because King, remember like a couple weeks ago, King was like, we're having crazy outbreaks here, like everything is locked down. Now we know why, because these crazy variants are coming from, well, one of them is coming from Peru specifically. So it's interesting.
Yeah, I blame King. He's King's the reason. Um, but yeah, some other random news. Just kind of put it out there. The CDC, they announced about the eviction moratorium. They expanded that out for another.
Yeah.
Is it a month or two?
Till the
Um,
end of October, I think.
yeah, we'll see what that does, because I know they've only used like 10% of the funds that they've allocated for that until recently. But um, no, it's the lamb. Blah, 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 blah. I'm butchering it. I have to. The lambda.
Lambda, yeah.
Let's see. Yeah, lambda variant. Pull it up really quick. Or it could be the London Academy of Music. Man, that's a horrible acronym to have to be associated with.
Oh
Lambda
Lord.
variant. Lambda variant. That's a bummer.
I think there's a
Just punching
BD
it.
in there. I think it's a yeah.
Yeah. So yeah, there's this one. I haven't read it in the last 24 hours. But this is the big one.
Yeah, they're finding some cases in Houston actually.
Yeah. But be careful. Same with the Corona fear. Yeah, it's true. I'm actually surprised Corona didn't play off of that. I guess that wouldn't be really.
Nah, that's sour. Yeah, it's
But definitely there was
bitter
some,
taste in the mouth for that one.
so to speak. That was punny. Bitter taste. But yeah, variant of concern, quote unquote. That's punny as well. But yeah, there's this lambda guinea. You know what I'm saying? But anyway, but there's a moratorium that's also being that's conceded now at the federal level. So I'm curious to see what happens with this. I mentioned that I may or may not talk about a house that I recently purchased, but does this worry me? A little bit. I'm not too worried about it, but did all the memes in the late? Yeah, it's true. I keep the memes coming. If anybody has memes, please do post the link in the chat. I'd be more than happy to click it and pull it up. It'd be kind of funny. But yeah, considering, I'm just a little worried about this moratorium, because they only released, I don't even know if it has it in this report, but they only released like 10% of the moratorium monies to renters at this point. So
Yeah.
Yellen told lawmakers already, they said 40%. That's not true, because there's other reports saying that there's been less than that. But of the 45 billion, even 40% of 45 billion isn't enough.
I don't know a lot. Yeah.
They should be at 80, 90% at this point. So somebody's not doing their job, so to speak. But at the same point in time, does it worry me? No, because there's funds available. But the fact that we're extending it yet even longer, as a nation, as a leader, the federal government, that doesn't put a whole lot of trust, or doesn't, it doesn't ooze the fact that we're confident in the market and the variant. So
I mean, it's interesting that you bring up a good point about like the forbearance extension. I have on my screen student loan relief got extended till January 21 of next
yeah,
year, which is crazy. So
yeah,
I'm really curious what you guys think in the chat. So we're seeing amazing employment numbers come out from last month, killing expectations. We're seeing, people are spending money, people are buying things. Why does the government keep extending things? Like I'm really curious what you guys think. Nate, do you have an opinion? Like why things are they just trying to continue to fuel the growth in the economy and market? Do you think they're scared about something that we don't know about? Like I'm so curious what your thoughts are.
it's interesting. Yeah, I don't want to speculate on this a whole lot, but I would just say, the government's job is to take care of its citizens, and whether it's through Medicare, Medicaid, health, hospitality, the hospital industry, but also financially. I mean, when we're talking about fiscal monetary policy, what's ultimately the job of the government, right? And it's to ensure that it doesn't overheat, right? That inflation doesn't run rampant, but also, how do you how do you secure the market and make sure that you show that there's some confidence that everything will be okay, right? I mean, ultimately, that's what the federal government's for, is to be that safety net. So I think that's what they're trying to exude here, is essentially, hey, look, we're going to take care of you. Everything will be okay. However, I don't know if the private market believes that. And I think that's kind of what you're alluding to a little bit in your comment, is the market ultimately will dictate what the market feels, right? Money doesn't have feelings. People don't trade based on what government says. They do and they don't. But ultimately, I'd be curious to see how things go in the next 6 months. There's a very interesting chart that popped up in some other podcasts that I listened to, and it gauged, I'm going to have to remember this correctly, but it gauged that the second bull run ends up being, because we already had it last year, everybody made 100+% on their portfolios. The second run, which we're currently in, tends to be either stagflation and or consolidation. I think we're at that point where people don't know what the hell is going on, including myself at this point. The T-note is bouncing up and down. The bond market doesn't know what it wants to do. The stock market's confused as ever at this point. People are just putting money in where they think that they're going to make money, i.e. Robinhood, and then cash out accordingly. So, I don't think anybody knows what's going on. I don't think anybody will until next summer, quite frankly. And part of it's because of COVID.
Yeah. So many unknowns. I mean, you made a funny comment on Robinhood. We can just go into that because that's a fun conversation.
Are you pulling up our notes? You showing people our notes, bro?
I mean, how am I supposed to get to them? I gotta get to them.
No, that's good. That's good. We're gonna
But
screenshot them.
I gotta bring up the articles beforehand. But crazy. So Robinhood. Anybody buy Robinhood stock? I know you're talking about it in the Discord a little bit. Robinhood, going insane. What do you guys think about it? Do you think it's gonna continue to go up? Nate, what do you think? They offered 100 million shares, which is insane.
Yeah, I literally bought 2 shares at 30.
You bought 2 shares?
Yeah, just to see what it was about, and
just to be part of it.
Yeah, just be like, oh yeah, I'm part of that. No, I'm gonna ride it for a little bit, kind of see what happens. Can it break 100? Maybe. Who knows? Who fucking knows at this point?
It's a new GameStop.
Yeah, I think it could be.
We did see AMC stock go down after Robinhood started moving, so people might have moved their money from AMC to Robinhood.
Yeah, that's true. But I think you were talking about it being shorted.
Yeah, it was 40, a really high.
40%?
Yeah, so we mentioned it. We were talking about it in the Discord, and then, when it started going crazy, and I was like, yeah, this. I was looking at the numbers, and it had a really high short float. So when we look at on on the 8, 3, and 4, short interest went from 6 million shares to 27 million shares and 34 million shares in short interest. And I personally believe that's why the stock went crazy. Is I think 34 million shares is about 40% of the shares that they have. So you saw a really big increase in short interest. I think that's why we saw that crazy push higher.
How many?
Personally, I think
How,
it was a technical push higher from short interest.
how many shares did you say?
34 million was the short volume.
34. I'm going to do the quick math on this because I'm curious to see.
I was reading an article that said on the 730, when it was 12 million shares, they said that was 20% of the float that was short. And so I just did the quick math, 12 times 2,
Mm-hmm.
about 24. So 40% should be 34 million shares. That's the quick math that I did on it.
Got it. I'm looking for some other numbers here. But yeah, that's it's pretty interesting stuff. Like saying more is pretty vague. I also think that there's possibly more purposeful misdirection, reporting people spending more, as in are people spending more, as in commercial spending is rebounding from the economy's lowest point during the pandemic. Or are they truly? So the benchmark, I hear you, Randy. I agree with that statement, 100%. Like based on, are we at 20% versus the 100% benchmark from the prior year? I agree. The thing is, savings is up dramatically, but people are spending their savings down. We talked about that last week as well.
Well, savings dropped back down to pre-COVID levels.
Exactly. So people are running out of money at this point, which makes you wonder what's going to happen next. I think I'm waiting for the housing market. Actually, I don't want to say collapse, but I think a lot of people who had, so the credit score for people who bought homes were above average from prior
Yep.
years. So there's that, plus the fact that there's Biden money that came in that I think people leverage for down payment. But I'm very curious to see, even though their credit score was whatever, better than average, they had money to put for a down payment to buy a house. I'm wondering if people are going to be able to sustain the increased prices of the homes.
The mortgage
Exactly.
prices.
Even though the interest rate is lower, so there's this inverse correlation that we've seen where prices are now higher and interest rates are lower, right? Where before it was the opposite, interest rates were higher, prices were lower at the homes. So by virtue of it being hyped up that people were buying houses because interest rates were so low, I think people might have screwed themselves. And exactly to Jake's point, property
Yep.
taxes go up because of that.
Austin did that.
You beat me to it,
Austin
Jake. I was just about to get
not
there.
only not only because of all the spending that happened from states during COVID and development that's happening in a lot of cities, not only are the home values higher, so your property tax, there are a lot of cities that are also increasing the property tax percentages. So not only are you paying more just because the home value went up, but they're also increasing the property tax numbers that you're paying. And so it's really interesting. To your point, Nate, about the homes, this came out during COVID when the big housing boom started happening. Is I think part of the reason why people had higher than average for um, the credit scores. They said a lot of people, they were seeing evidence that a lot of people were buying their second homes because interest
Mm-hmm.
rates were so low.
Yep.
So really
Yep.
wealthy people were starting to buy second homes, which goes to the point as well. Are those people going to continue to be able to afford or want to pay down that second mortgage on their second homes? So I
Yeah.
agree with you on waiting a little bit for the housing market to cool down.
Yeah. And based on that, California in particular, the Bay Area, there's a lot of people buying homes in Tahoe. From the Bay Area, some vacation homes, if you will.
Yep.
Yeah, exactly to your point. So I'd be curious to see, do they hold on? They probably, a lot of them are buying cash anyway, who are buying those second homes. But I'm curious to see, as people are buying, what does that look like? Are these going to be more junk mortgage-backed securities, or how are they going to package them up in terms of the bank? King has an interesting question, kind of off topic, but on point. Is any trading books that you read or worth a read?
I have no idea. I just watch YouTube videos.
Yeah, I think I don't want to say those are obsolete, King. At this point, by the time anything gets published, it's kind of too late. And I don't mean that in a negative or pejorative way, but there's a couple books.
I mean, there's
I'd
like
have
famous books about like finances and investing and things like that. So
yeah,
just depends what perspective you're looking for.
Warren Buffett always goes back to a couple books that he ends up picking up to read, but even then, the
The
Intelligent
Intelligent
Investor,
Investor.
yeah, yeah, Poor Charlie's Almanac. Like, there's these, I don't know what you want to call them. There's books out there, but those are kind of the fundamentals. The problem is the market has shifted, and so has the economy and technology. So I don't know if those are quite as pertinent as a quick YouTube video or blogs or podcasts these days. Just the market's completely shifted in how we do business. And so, and the trading mentality has as well. I mean, who would have known retail investors would exist? And just, yeah, I think there's certain fundamentals you could take away from it, but I wouldn't get too caught up in that, King, unless you're really wonky and nerdy and want to know historical information based on, things back when Coke and Coca-Cola, not Coke like cocaine, like Coca-Cola and Berkshire and GE, and when Jack spacing on his name, Jack Welch and some of the other people were kind of king back then, if you will. But that's not what we are anymore, and I think you all kind of alluded to it in the chat. It's employers and employees, the dynamic's also different, where you have more unions. I shouldn't say more unions because those are kind of fading, but the dynamic is completely different than what it was back in the 60s, 70s, and 80s at this point. Babu wants to talk Walgreens.
Before we could talk about some stocks in a second, the last thing I want to bring up about the housing market. So there's two things. You can't really see my charts because my screen is blurry again.
Oh, it's good. It's good. You good?
But this first one is the housing price, medium sell price of a house in the U.S. The number is going berserkers.
Yeah.
Like, look at this pop in 2020. It went from 322 to 374. What was that? 60? Is that math? 50K?
Yeah. 50.
Which I don't know what that math is in a percentage. Double check it.
I think it's 55K.
I think it's 15% is what they said in 2020.
Mm-hmm.
So the house price have got 15% just in this 1 year. That's insane.
That's
and
way
then
too fast.
The second thing I want to look at as well, I think my screen's getting cut off a little bit maybe. The second thing I want to look at.
Yeah, it's cut off a bit.
I'm going to zoom out. The last thing is house supply. So I think this is really important to look at when it comes to housing market because we're seeing lumber costs go down significantly.
Oh, yeah. Mm-hmm.
And so if we continue to see lumber costs go down and see more deflation in that specific sector, then we're going to see a continuous increase in monthly supply of homes on the market. And as more with the market moving up 15% in 1 year, and if we start to see an explosion of housing supplies or the supply of homes, then that's going to help pull back the housing prices some. So the supply of homes is something we're definitely going to want to look at. So obviously on this chart, what we see is home supply hit an all-time high in 2009 and what happened. And so we'll have to see if this home supply continues to creep up or not. But this is something that I'm going to keep an eye on when it comes to the housing market is what's the supply of homes looking like in the market.
Yeah.
Because it's starting to peak up a lot.
Yeah, I was just going to say, and there's been reports, and I think we've talked about it in the past, about sellers versus buyers at this point. It's flipped at this point, where buyers are thinking that they could sell for more, and sellers are thinking they could sell for more, and buyers are thinking they could buy for less or not wanting to buy as much. I will say, as a investor in homes, just closed on a deal recently. I'm going to hold off on buying another investment property for probably another 4 to 6 months, just depending how the market goes. Let it cool down a little bit, but yeah, 10%. Thanks, Randy. Appreciate that. Multitasking a little bit here, but yeah, overall, that market's got to cool down a little bit, I think, before anything else happens. I understand kind of FOMO, but to your point as well, people are buying a lot of second homes, vacation homes, not anticipating working from the office either exclusively or as frequently, I think is a big important factor to keep in mind. But 3 years, is that what you're saying, Babu? Housing market is in demand, outpaces supply. So, Babu, I think you're talking about a whole separate scenario. Are you talking about people buying homes or housing supply, meaning affordability and the rate that we need to construct and build homes?
Yeah, I think he's talking about that. There's been some articles coming out that said that due to the home supply being so short that we're basically going to be in a deficit for the next 3 years in terms of homes needed for buyers.
Yeah, it's been like that for like the last decade. Like we've always been behind.
Yeah.
So, and ironically though, this is devil's advocate I'm going to put out there. I'd be curious to know if it even matters at this point, because if boomers are fading away and millennials and the following folks, considering I'm a millennial, aren't having kids at the rate that that our prior folks were, like your parents, my parents, etc., we're having, I don't know if we need all those homes unless we're going to be having an influx of immigrants coming in that we do need, right, to maintain our economy at the pace that it's growing. But do we really need those homes 10 years from now, 20 years? You know what I mean? Like, I don't know. I have to put that out there. Yeah. Like, I honestly don't know if that's even worth the logic of thinking about. If it doesn't really matter, it's a moot point 10 years from now. Because then what are we going to do with those units? Then we're going to have, 500,000 units vacant. Yeah, exactly. Just sitting there on the market. Like what, I don't know if people are thinking about that.
That's long-term thinking, yeah.
But I was kind of thinking, I just watched Idiocracy, completely random topic. But I just watched Idiocracy.
So good.
Oh man, dude. I should put that on my every year. Just watch it.
If you guys have never watched that movie, if you get offended easily, do not watch it. But it's a movie that you have to watch about kind of society and how we think, and it's a great social commentary movie.
Yeah, just you kind of sit back, relax, watch a movie, and kind of laugh. But also, if you want to go down that rabbit hole, that dark, I mean to, but haven't yet. Randy, I think
it's a must watch.
Knowing enough, I think you would probably enjoy it in a weird way. So, President Camacho. Anyway, interesting movie. There's so many comments I want to make right now. So, jumping into stocks, maybe we'll do a little stock talk right now.
Yeah, we could do a couple
random
stocks.
Question: does anybody know Bezos got knocked off the charts? He's no longer the richest person. Does anybody know who knocked him off the charts? Very curious to know.
I have that up.
He's gonna fix it all in 1 week. Sounds like Trump, Babu. But if anybody knows, let us know. I'd be very curious to know if you know. But also, there was this article and it quoted. I'm gonna read this quote really quick, and I'm curious to know your thoughts on this because it has to deal with Robinhood. I know we just got done talking about them, but Robinhood, Robinhood's trades got halted the other day because of the volatility. They increase, ever so often they get, when it's above 10% or et cetera, volatility hits an extreme, they halt trades. Ironically, Robinhood, HOOD ticker, it triggered a breaker. Excuse me, and they halted trades on that stock. So just kind of funny. Irony, maybe. Meme a little bit. But on that note, Cathie Wood, so somebody was quoted saying, people are trying to jump on the back of Cathie Wood's vote of confidence in Robinhood's shares. So this managing member of Great Hill Capital in New York, Thomas Hayes, said, and the catalyst was certainly Cathie Wood putting in a sizable position after everyone was downbeat after the IPO. Do you think out of pure curiosity, because do you think Kathy Wood has that much of a clout to say I'm backing Robinhood because either it was on a down shot and she picked it up at a good deal, or she believes in it? But also, I think you mentioned something to me earlier about Kathy Wood and people going
Her clout is
against her.
diminishing. Yeah, her clout is diminishing. Just like Chamath, like both their clouts are diminishing quite a bit. A lot of data is coming out that's saying that like retail investing is starting to die down a little bit again, and because the market is not, besides the S&P creeping higher, like a lot of stocks aren't doing that great. And so, yeah, she's lost some of her thunder,
Yeah,
to put it shortly.
and I think she came up because of everybody came up last year. Like if you did not come
Yep.
up in your portfolio,
YouTube
you did
video,
something
like
wrong.
YouTubers, celebrity investor, like everybody, like everybody got bigger last year during the crazy market times that we saw during the
Yeah,
first couple months of this year.
exactly. She just
It was
happened to
like
be
the
the one
peak.
that invested. She's got I don't know how many ARC portfolios,
Yeah, a
but
lot.
just happened to be that right place, right time. I think she was overinflated a little bit, but I digress. I'm not going to go down that rabbit hole.
Yeah.
But we have a couple stocks that we've selected over the last few months. We haven't really talked about them lately, but one that we were talking about while we were gaming. Yeah, Miss Wood does have a big following. I don't deny that, Babu, but I think she's going to get called out on her bluff. I don't want to call it that, but I hope you can read between the lines of she got lucky. Does she know what she's talking about? Yes, but as anybody knows, the stock market is a fucking guess at the end of the day. Nobody can predict it. She just happens to pour money in, hopes people follow her, and then she cashes out. If you watch her trends, she buys in and then sells out and buys into another one and hopes people follow.
She's the only hedge fund swing trader. No,
Yeah, there
hedge
you go.
funds don't
That's a
swing
very good way to
trade.
put it.
She's the
And
only hedge fund swing trader.
yeah, like, and that's probably what irks me the most is it's not even, it's an art in
Bump
and
and
of
dumpy.
itself, but yeah, it's just like, what are you doing? But anyway, so there's a pretty interesting stock that Dylan and I have been looking at. I just bought another couple grand of shares, not gonna lie, of this one for a couple different reasons. It's a long-term play for me. I think you're in the same boat. Did you pull up is that
Yeah, it's their stock graph.
beautiful? So I'm actually gonna pass it to you for a sec to kind of break it down, and then I'll follow up.
Well, just shortly, LLKKF is a lithium stock. They're an Australian company. This is something Nate and I bought a while ago. I don't even know. Was it back in February?
It's an OTC. Yeah, February. I think we first started diving into it.
January, February, something. It's an OTC
First quarter.
name.
Yeah.
I don't buy a whole lot of OTC names. I buy them every once in a while unless I really believe in them for some reason. And so this is a stock that we've held for a while, and it went down with a lot of stocks, but it's been running pretty ridiculously lately. So we want to bring it up to that because Nate will talk about it right now. When you're talking about that special dividend, this company is doing something similar. So Nate, if you want to break that down, it's the stock that we're
Yeah.
watching.
So I'm a big investor, if you will. I'm long-term holding or leaps for if we're talking about non-OTC trades for stock options. But this one
Yep.
in particular, yeah, it's still OTC at this point. People are thinking it's going to break and hit one of the major markets. I don't know if it will anytime soon. Maybe next year
Yeah.
or later, but
It'd be
definitely I
hard to
think,
do that.
yeah, they're on track for some pretty good opportunities, I think. So they just came out with something. I got emailed because I'm on their newsletter feed, and I got emailed this opportunity, if you will, where it caught me off guard. Yeah, but a bonus stock type thing, right? And so LLKKF, they were trading. What are they trading at right now? It's like
50 cents.
50 cents.
49.
Okay, 40. Yeah, perfect. Okay.
Yeah, not
So
in Robinhood.
yeah, it's not going to
Sorry,
be on
Jake.
Robinhood. So, and this is where I think the retail traders, if you will, are going to get are not going to get this opportunity. But and maybe it's a good thing, quite frankly. But LLKKF definitely is one that we've been looking at. they have this opportunity that for every stock you buy, it's this weird ass announcement. I haven't seen anything like this before, but they're offering bonus options. So as of 5 p.m. Sydney time on, I got to find the date. The format's off here, so apologies. But they're going to issue bonus options as of Friday, August 27th, but you have to own the stocks by the record date. So August 20th, it was bumped. It was August 10th, I think. And then I saw an updated thing on their website, August 20th. So for every stock that you own of this company, which if you bought it back when we bought it, it would definitely be worth it.
Yeah.
But the bonus option will have an exercise price of 35 cents a piece. So they're going to issue one free bonus option, meaning you're going to have an opportunity to exercise a free stock if you choose to. One for every 10 shares that you own at 35 cents. So currently the stock is trading at 49 cents, for example. If you want to buy, 10 shares of this, you get one free bonus stock at 35 cents if you want to exercise that option. Plus, if you exercise that option, you get, but wait, there's more, an additional stock option at 75 cents if you choose to do so. That expires in June 2022. So these folks are very, very confident that their stock is going to hit at least 75 cents by June 2022. Not everybody understands this whole predicament rather. And this is something that I had to reread like 4 different times. And I was like, what the fuck does this mean? Like, so if I own stock, I actually get a free bonus option stock. So an option is the right to purchase an underlying security at a specific price quoted, which is 35 cents here. You have to do it though within about a week or two.
Wait, there's more.
Yeah,
Seriously.
but wait, there's
It's
more.
so confusing.
And ironically, this is kind of what's interesting. So they intend to approve the trade and additional options. So it was supposed to be on seek approval of list trade on. So it was supposed to only, okay, this is new. So this is an updated one as of August 6th.
Oh, interesting. Yeah. They're trying to give it to the Aussies.
Yeah, now it's ASX because before it wasn't ASX.
Yeah.
So this is interesting. I'm going to have to look into it because the last one was like July 29th is when they released it and it said not on ASX.
Yeah.
So now I'm very confused on why.
There's a
decided to
misprint.
move. That's interesting. So I'm going to have to look into that. But regardless,
It's a long-term hold for me. I think Nate feels similar.
absolutely. Yeah,
This is, and you have to realize this is an OTC name. It's a risky bet. This is a pre-revenue company. But with the EV space, Nate and I have this conviction that regardless of what succeeds in the EV space, lithium is a part of that picture. Mm-hmm. And these are stocks that I believe are going to be successful over the next 10 years. I don't know what the capacity, and that's why I only put a really small allocation of money in it. This is not the amount of money, personally myself, I'm not putting like crazy amounts of money into it like I would something a little safer, like Walgreens is something that you brought up a second ago, Babu, but something to put on your radar. I bought it, I think at 20 cents, so a much lower price than the current price. But it's just something to keep on your radar if the price drops some.
But yeah, it does look like Lake will not seek listing a bonus on ASX here, but they will for the 75 cent trade. So we'll see what happens with all that. It's just interesting. I could see a spike happening within the next few trading days for people ramping up to this. And then maybe they sell off when they get it. I don't know.
It's hard to know.
But at this point, yeah, but it's definitely a long-term play. I could see them hitting a couple bucks at least in the next few years. I think.
Yeah, in the long term, if they can be successful and actually like prove out what they want to do with the resources, then this could definitely come off the OTC exchange someday if it does see success. So definitely keep an eye on it.
Yeah, and then the other one is Hertz. You mind pulling up that chart, guys? So
is that HTZZ now?
Yeah, I believe so. And then they have warrants as well, which is pretty funky because put a W after that one and you'll see after that ticker, put a W. And they have warrants out that are trading at $13.50. So there's this weird play, kind of the stock's playing against itself. It's kind of this weird, if I buy the warrants, is it worth more than the stock itself at this point? Because the warrants don't expire for another 30 years, I believe, at this point, or 20 some odd years. So it's like, it's a stock in and of itself, essentially at this point, which is stupid. I don't know why they do that. But regardless, I did want to bring it to folks' attention. We haven't talked about Hertz in a while. I was a buyer, a pretty hardcore buyer before it went out of bankruptcy. It came out. I'm high risk, high reward kind of guy, sporadically, strategically though. So Hertz came out. They were pennies on the dollar to what they are now. They came out of bankruptcy. They got bought and have kind of flipped a Yui with their stock at this point. A little pixelated, but that's fine.
It'll go back.
Yeah, it will. Hopefully by the time I'm done kind of talking here. But Hertz, they were looking at issuing another $500 million of stock recently, and this just came out today. SEC questions why if they're insolvent. And I think insolvent's kind of a strong word. I don't know if I'd say insolvent. Technically they are, but as we're moving forward, there's what do you call it? Their earnings is supposed to come out, I believe, on Monday or Tuesday. So we'll see what happens there. It's either going to spike, and then there'll be a sell-off shortly after, or I assume there's going to be some gap that's going to have to be filled. I think there's a couple gaps here that you're looking at as well. But kind of looking at it, as you see here on May 26th, company was worth 55 cents a share. Let me say I bought it at that, if not lower at that time. And then on Tuesday, they were going $2. And then the company was worth $20 a share in February when they came out of bankruptcy. So very crazy, very kind of cool story for them. They also own Thrifty, Dollar, and Hertz as well. So it's multiple. It's not just Hertz. It's multiple companies under that umbrella. So I'm quite bullish on this one. I would say travel industry before this new wave came out, I was very heavily bullish. Now I'm only slightly bullish on travel. People still want to get out, but damn, I wish we could fix your chart. I don't know why it does that. But Hertz is looking to move to sell new shares. They're going to get SEC approval, and they're going to move forward. So I'm looking at that as one as well. Travel stocks is a huge one that I'm looking at for the next probably 365 days plus, in particular cruise lines. I'm looking at some airlines, jets. We've talked about that a while back. In fact, Dill did a great video about that about 3 weeks ago now, 4 weeks ago maybe.
Randy.
So as we're looking at that, so damn annoying. I don't know why it doesn't. I'm trying to find if there's a way I can optimize your screen.
Yeah, we got to get that nitro, that Discord nitro.
Well, F it.
If you haven't yet, gift us your subs if you haven't already.
So
you'll help us get nitro.
Remember how I brought up Netlist? It dipped to 7.
They're the ones that won a lawsuit against Google for their search engine. Basically, that they're saying that Google stole their IP, and so that's why they went from $2 to $10. But yeah. So something I'm looking at, and if you guys want exposure to international markets, I'm looking. Oh, this is a crazy chart because I charted it earlier because I made a YouTube video. Go watch that if you haven't. So I personally bought some of this. I'm not your financial advisor, but it's KWEB. So it's a Chinese Internet ETF. So this is sold off, I think 70% at this point, 60, 70%. So this is something that I'm starting to acquire shares in. I'm super bullish Chinese. I'm super bullish China in the long term.
Even with the current regulations going on?
Oh yeah. Dude, they're down 60%.
All right.
If it goes down 30 more percent, I'm going to go buy some more. China's not going anywhere, guys. China is not going anywhere. Yeah, and that's the reason I bought the ETF, because I don't know what stocks they're going to continue to make regulations on. And so the ETF helps me. I believe that China's going to become, they're going to continue to be a very strong tech country. And so I'm personally starting to acquire shares down here. In my opinion, I think this is a healthy price, and I'll just buy more shares if it goes lower. Because in 10 years, this is going to be much higher, and that's my goal with this ETF. And it doesn't get delisted. I don't know what Chinese companies are going to get delisted from the U.S. market, and so this ETF saves me from any of these companies that might get delisted. So
What's in
I'm
the
super
portfolio?
bullish on China. Alibaba's a big one. Baidu's a big one. Neo, the electric car company, is a big one. Tencent's a big one. Some of the popular big names that you know of that are known. So I'm super bullish. I've been waiting to consider buying, and I finally started to nibble. So I personally love. It's just the chart is showing me that there's no reason why you shouldn't buy here. Oh, my chart's not blurry. RSI super oversold. I love buying in oversold territory. If the stock pops back up and goes back below oversold again, I'll buy some more if it goes lower. And so I'm super bullish long-term China. Um, Multiple years. This is something I'll be holding in my portfolio for years to come. So I've just been waiting for an opportunity, and I've found my opportunity on this 60% dip.
Nice.
So this is what I like. And then if you want more of like if you're nervous about Chinese tech, the other ETF you can buy is MCHI. So this is kind of like the S&P 500 for China, MCHI. The other one is KWEB.
Yeah. KWB.
KWEB is the Chinese stock or the tech names. MCHI is all the industry. So it's kind of like the S&P 500. It still has a tech weight to it, but it also takes the other industries as well. And that one hasn't gone down as much. Still a pretty gnarly move. I think it's down like 30% compared to 50-60% on the tech names. But this is something if you don't want as much exposure to tech in China. But I like these at this price, and I'll be buying more shares as it dips lower. And I would suggest, I made 2 videos on my YouTube channel in the last month. I would really go watch those videos. I basically break down the Chinese economy and why it's not going anywhere, and why all this regulation is actually a good thing for the Chinese economy. And so I'd really suggest you guys go watch those to kind of understand
Hello,
the
everyone.
Chinese
Welcome
economy.
to Chilled.
Neo. But yeah, those are some things I'm looking at for more long-term holds. I've held off buying other names, and we'll talk about this more on Sunday. I don't want to go too much in it tonight because we're getting more into the depths and details of things, which I do on Sunday nights. If you don't come on Sunday nights, you better start coming. Most of you guys here do, but your videos need more rocket ship emojis. You mean on the thumbnail, the rocket ship?
To the moon.
Dude, I put out fire content on my YouTube channel, but it'll eventually blow up, and people will come here, and our stream's gonna be awesome with hundreds of people. One day, this stream will have hundreds of people, and you guys are the OGs, and you guys being the first people coming and watching us means a lot. So we really appreciate you guys coming here every Saturday and Sunday and hanging out with us.
100%. 100%.
But that's about all. I'm not really buying a whole lot of other names. I know Nate said you were selling off some things the last couple weeks as the market's hitting new highs for some names.
We're going to add that to Dylan's. We're going to get him the air horn for his videos when he kicks off. That's what we're going to do.
I need something.
Explain why this is in a dumpster fire. Yeah, what have I been selling off? I've been letting go of some stock, kind of over this, the volatility. But I have a lot of call options. I put some cover calls for sale to make some quick money as well. But Yeah, I've been letting go of some items. I did sell off some of my SDIVs, my super dividend funds. Did that. I have a lot of stop loss actions on mine. Let's see. Sold some of my hertz a little bit just because the volatility is killing me a little. I did have some cruise lines, call options on those. Sold those off, made a quick buck. Some of my travel stocks I've been letting go slowly but surely. And then I'm just buying up on the dip on some items. So yeah, some more Ford when negative news comes out. Definitely buying some of those. But my portfolio has been shifting quite heavily now from actually owning stock, unless it's dividends or something else, to more call options at this point. And then if I do own more than 100 shares of something, like I sold off some of my short QQQ. I know you've been talking about that, King. I'm looking at you. The QQQs, estoy vendiendo esos. Voy a ponerlos en the cover calls. So we get some covered calls on SQQs. If I've held those, throw those up for sale, or maybe some puts, if you will. Just kind of playing the market accordingly. But yeah, I don't know. Mixed feelings on the market. I haven't been feeling too solid on anything lately. Kind of looking through my portfolio. Kind of blah. Been buying up some lithium as news is picking up, and specifically with the Biden bill and the administration saying that they're going to invest more in infrastructure. Been looking at that, buying up kind of random sporadic stocks accordingly. So I don't know. How about you? What have you been looking at?
Yeah, I'm waiting for it. I still think I think the market is pushing back this small little pullback that needs to happen. I don't know how much longer it'll push it, but I still have a bearish bias for the short term. There's just too many red flags for me right now, and so once that happens, I'll go on a little buying spree. My chart went
Yeah, what chart
pixelated
are you
again.
looking at?
It went Minecrafted. So
What chart is it?
so I'll cover this stuff tomorrow on the Sunday stream.
Oh, MasterCard
But
for King.
I'm still seeing red flags, and I think a pullback is going to need to happen. Still, I still have that same bias, so we'll see. We'll see if it happens the next couple weeks.
King
But
on
yeah,
MasterCard.
I'm waiting I'm waiting a little bit right now.
What are you looking at on MasterCard, King? So you're grabbing some of those. Completely random, but I think kind of important, kind of talking about MasterCard. That's a good point. I appreciate bringing that up. But I don't know if people have been looking at Afterpay. Square just bought Afterpay. And so they're looking at essentially you take the item home. It's kind of like layaway, but instead of it's the inverse of layaway. Like you buy it now and you could pay in installments. Specifically,
Like
Apple has
a
been
car
looking at that.
payment, basically.
Right. Apple's been looking at it because their products are so fucking high and expensive.
$1,000
Like, how do you pay? Yeah,
for a
exactly.
phone.
$1,000 or like $3,000 for a computer. Like, you can't pay that all in cash. Some people don't even have the credit card limit to buy that. However, if you're in the cult of Apple, you probably have that kind of money somewhere on your credit card. But part of their target demographic is trying to figure out how do they sell more, and part of that is payment option plans. So Square bought Afterpay. They want to integrate that into their atmosphere, if you will, of payment options. But Apple's looking at it. A couple other folks are now looking at it. So I'm curious to see what that's going to do to the market, in particular to people in debt.
Some more
As
debt.
we've been talking about it. Exactly right. Is that going to push the S&P 500 up again? You know what I mean? Like, it's that cycle, the circle of life, I think is it. But that's kind of what I got for tonight.
Yeah, I think that's a good amount for today.
So Bezos, if anybody didn't guess, Bezos got knocked off by a person named Richard Arnault, the owner of luxury brand Louis Vuitton. So took the spot from Amazon founder after he was reported to be worth $196 billion on Thursday, according to Insider.
That's also really impressive for owning a luxury brand.
Billion Louis Vuitton, while Bezos is worth a paltry $186 billion in comparison. So pretty interesting.
When you get divorced, cut that number in half.
That's so true. Yeah, you're donezoed at that point. Um, have to find my mojo. I feel you, King. I feel you on that one.
It's a weird market. It's the
Yeah,
S&P making new highs is not a good description of what's actually happening in the market.
yeah,
You know, most stocks are not hitting new highs. And so it's definitely a harder market than the S&P is saying to invest and trade in.
right. So that
But yeah, I mean,
said,
I think it's a
do the old cash register. Thank y'all for hopping in.
yeah, we appreciate you. I mean, we're so appreciative of you guys. Like we started
Here for
in
the bed.
February doing this, and we had like one or two people. So just having four people or five people here is a pretty big deal for us. So
Yeah.
we
And
really
if you
appreciate
guys
you guys
have
coming by every Saturday.
family and friends that you think would care about this kind of stuff, this content, and also the content in and of itself, if there's something you all think we should stay away from, stuff that you want us to pick more at. I know you kept talking about Walgreens in the chat, bringing that up. Well, we could definitely bring that up either tomorrow or next Saturday. But as we're talking about the content, want to make sure folks um, it's relevant to you at the end of the day and that we have a good conversation around it. Definitely care about what you all think. I know Dylan and I are constantly trying to figure out where are you guys at in the market, how can we help be of assistance, but also giving some information to help you make better insight and decisions on that. However, we are not institutional investors nor financial advisors, so please don't take our shit serious. Just do what you do best and try to make money. Just want to be able to provide some data for y'all. So yeah, Bebu, feel free to invite some people out, man. Would greatly appreciate it. And if you have Amazon Prime or if you feel like paying a quick buck, please hit the sub button, subscribe to our channel here, but also Chill Deal. I posted a link. I'll post it in really quick again as well to Chill Deal Trades. My cuz does phenomenal videos, analytical stuff. He puts his blood, sweat, and tears into this, so please support him as well. But also, as a team here, we just want to make sure the content's relevant. You all get something out of it. Invite your friends, your family. We greatly
Yeah,
appreciate it. So thank you.
appreciate it, guys, and we'll end on our slogan, our famous slogan. This is where we win. We play.
We win too. We win too.
I was so used to saying the end part. I said the end part instead.
Yeah, we're gonna
Yeah,
take King's. We're gonna take King's comment out. Everybody, put your life savings in AMC, not financial advice. It's so accurate. Where we play.
And you win.